Welcome. This is the Lifetime Cash Flow Through Real Estate Investing podcast. This is where you'll learn strategies to help you achieve lifetime financial freedom through real estate investment. Your host, Rod Khleif, has owned over 2,000 homes and apartments, and he brings experts in all aspects of real estate investment and management onto the show. Now, here's your host, Rod Khleif.
I want to tell you guys about something I'm really proud of. Maybe you've heard me mention it a couple times in the past. For the last 8-9 months, I've been working on a book. It's all about multifamily real estate investing. It's like over 200 pages long. It's really like a textbook, play by play, step by step, soup to nuts, how to do this business. I mean, from finding the market area to figuring out what's the right market area to finding sellers, talking to brokers, developing relationships with brokers, developing relationships with sellers, and how to fund your deals, how to finance your deals. I mean, there's no fluff in this thing. And guess what? I'm going to give it to you guys for free. Highly recommend you take me up on this offer. I'm actually going to start selling it after the first year on Amazon, but I really want to give this gift to my listeners for you. I mean, you guys, we're over 250,000 downloads on my podcast. It's just extraordinary what you guys have done for me, and I want to give back to you. And I know you know that I take free calls from you, and I've done probably close to 150 of those calls, and I love those. I mean, that's my favorite time of the week when I take those. I'm booked out a couple of months on those. But what I've noticed is patterns. Literally everybody I talk to needs help in some fashion. And, I know this book is a big step in the right direction. Now, it's being edited right now. I have a syndication attorney looking at the syndication portion, and it's been final edit. And, it's like we're literally just a couple weeks away from having it ready. So if you guys want it, all you have to do is text my name, Rod, to 41411, and we'll put you on the list for it, and you'll have it shortly. And, I know you'll get value from it. So again, just text Rod to 41411 and we'll see that you get it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. I know you guys are going to enjoy the guy we're talking to today. He has built a $50 million, soon to be $65 million portfolio from the ground up. And the very interesting thing is he's only 29 years old, so I know that's going to pique the interest of a lot of my listeners. His name is John Cohen, and he started out as a stockbroker and then went to Marcus & Millichap. I'm sure you guys have heard that name, and was there for a while in the commercial division, and has really taken the world by the you-know-whats. So, John, we are very glad you're here, buddy.
No, Rod, I appreciate it. Thank you for having me on.
Absolutely. So please expand on my introduction. Tell my listeners a little bit more about who you are and how you got started, and we'll go from there.
Awesome. Yeah, no, without a doubt. I'm born and raised in New York, live in Long Island my whole life. Grew up and played baseball. Went to college, played baseball in college, graduated. After college, my mom gave me an ultimatum. She basically gave me two choices by saying get a job or get out of the house, with some choice words in the get out of the house part. And to me, it was an easy decision. I picked a job. She said, listen, I got this ad out of the newspaper. Give them a call. They're hiring. Called up, went on my first interview, and it was a stockbroker, pretty traditional path for someone in Long Island. So got my 3763 licensed and did that for about 3 years. Throughout my time there, I did okay. I did well. I was able to support myself. It was going in the right direction. But for the last 12 months I was working, I hated everything about what I was doing. I was going to work every day, just dialing numbers, not even wanting to pitch people, hanging up the phone. And throughout that period of time, that 12-month period, I was reading online about real estate, different types of investing, and realized that I had a choice to make. It was either, get into real estate and figure it out, or I had to leave the firm I was at and step up into a much bigger league. So I actually interviewed at Morgan Stanley. During that 12-month process, went through a rigorous interview period, and then got hired at Morgan Stanley. And the day I got hired, went into work the next day and quit my job to do real estate, in general. I had no idea what I wanted to do, but got into real estate. When I quit my job, I called my mom, told her, hey, I just quit. What is wrong with you? You have a great job. You're so young. Why would you want to quit? I basically said, I have no interest in this anymore.
Hey, I want to
said,
stop you for 1 second, because guys, all of you listening are going to have people in your lives that will react the way his mom did. And it's very common, and they're reacting from fear. Because their model of the world is get a job, work at that job, and get your retirement. And frankly, I think it's pretty obvious that it's a flawed model. But many people in your lives are going to react like that. Sorry to interrupt you, John, but I think I wanted to hammer that one home a little bit. So okay, continue. So you went, but you went to Morgan Stanley for one day. I mean, what happened on that one day?
It was one day I walked in. Facebook actually IPO'd that same day, and Morgan Stanley underwrote it. And it didn't do too well on the IPO. So I saw people just going crazy. And the defining moment to me, and this is no offense to any listeners, no offense to anyone out there, I saw a husband and wife couple that were about 85 and 84 years old sitting across the desk from each other. That was the team that I was working on. It was him, his wife, and two other guys. I was sort of going to step into the role of, they needed some fresh blood in there. And I looked at that. I saw the whole office going crazy because the IPO didn't do as well as they believed it would.
So you saw the stress. You saw the stress. You saw the age of these people, and I'm guessing you saw yourself in their shoes.
I looked at them. I said, "There's no way I can do this for the next 60 years of my life. I don't.
Wow.
I don't mind the stress and the environment, but I could not see myself in that position in 60 years and doing this for the next 60 years. So I went into my boss's office, the guy who hired me. And I said, listen, Jeff, I appreciate the opportunity, but I'm going to have to quit. I know I probably am going to irritate you a little bit, and you could have given this position to somebody else, but I don't want to do it, and walked out.
Wow. What next, buddy? What happened?
And then, like I said, I was calling my mom, and my mom was, what are you doing? But on the other hand, my family has supported me throughout this journey 100%. And part of, she said, what do you want to do? I said, I'm going to be, I'm going to go into real estate. And she said, oh, you're kidding. And I said, well, I don't even want to be an agent. I want to be an investor. And she said, well, now I know you're crazy. I'll support you the whole way, but you better figure it out quickly. So I started buying tax deeds and tax liens and realized how much work I was putting in. And they don't pay the bills that quickly. So I got my license, became a residential agent in the city, did about 52 transactions my first year.
Wow,
a couple
that's
sales,
very
mostly
impressive.
Rentals.
That's actually very impressive.
Yeah, it was. Okay. Thank you. I appreciate that. It was well worth it. I spoke to a lot of people that I knew close to me. Family introduced me to some people, and they said, do some rentals in the sales. You could do well if you hustle. But it's a hustle. You're doing what everyone else is doing. It's just, if you meet the person first and you don't let them go until they say yes, you get their account, or they rent an apartment. If you let them go off, or you don't meet them early in the morning, or you don't meet them when they want to meet, they'll just find another agent. So it was a hustle, which was good while you're 24 years old.
Sure.
It's perfect. It works, it works perfectly. But I always had the vision of going bigger, and I wanted to get into commercial real estate. So I did that for a year. The company I worked at really didn't have a commercial component to their business. So after about a year and change, I started interviewing at some commercial firms. Once again, reached out to my network, finding, people I knew in my network that were doing it, to ask them questions. And that led me down the path of, becoming a commercial agent. Interviewed at all the big companies, interviewed at a ton of places, and ended up picking Marcus & Millichap because I thought that platform would work best for what, I was looking to accomplish.
And they're the 800-pound gorilla anyway, so you did really well there. And how long were you there?
I was there for about a year.
Not long.
Yeah, about a year. So I say that because while I was there, the second half of while I was there, my brother actually opened a butcher shop, and he needed a little bit of help in the beginning. So my last transaction at Marcus was in 2014, but I left there in 2000. At the end of 2014, I left there in April of 2014 was when I stopped going into the office, and then the rest of the year panned out. Some closings happened, and that was the end of the Marcus. I had no new business. Anyone that called me, my old clients that I spoke to, I just referred them back to, the other members of my team, saying, hey, guys, I'm not a broker anymore. I'm not an agent anymore. Call Eric, call, the guys on my team.
So you went to help your brother at the butcher shop. When did you when did you get your first multifamily deal?
So in September of 2014, so I started my company in 2013 while I was an agent. I was doing some stuff on the side, single family flip, a lot of tax deeds in Philadelphia. So I did some stuff while I was working and getting my feet wet. And then my brother started a butcher shop. I helped him out early on. While I was there, I was doing most of the back office stuff, just making sure the financials are in line, making sure that he had a structure because he's 2 years younger than me. And I just was, keeping him. He had a partner, and I was just making sure the dynamic was good in the
you were protecting your younger brother. Sure.
Exactly. That's the best way to put it. And I was working in the office most, and then down there I kept my real estate going on. September of 2014 was more or less the in my head was the switch to stop doing the smaller deals and start focusing on the larger ones. I put my first multifamily property in contract in April of 2015 and closed on that in July of 2015.
Wow. Okay. You bought your first property a little over a year ago.
Yes.
And here in a month or two, you're going to be at 861 units?
Yep.
Wow.
Yep. It's been from July. Now I invested passively. It was a group of friends I know. We all technically are the sponsors on a deal that closed in June of 2015, but my friend more or less runs that one. And I put a passive investment in there just to get more experience under my belt.
Sure. And to have it on your resume.
Unit in Atlanta. Exactly. And it's a 44 unit in Atlanta. And then I closed on my first deal, and then it was a snowball effect, but it took me, it's a lot since 15. But I started educating myself the day I started working at Marcus & Millichap as a multifamily broker.
Sure. What a great platform for education.
Oh, yeah. And my mentor, when I decided to focus on this full time, he begged me not to quit because I had a great platform. Marcus & Millichap, personally, I'm maybe a little biased, but I think that they offered the best educational platform to learn while you're building a business. And that helped really kick off my career because I used my broker background to source deals, cold calling, the stuff I did there as a broker. I just took that over to the principal side, and that's really what's been able to scale my business. Also with my background in finance and some of my old clients,
sure.
That's really been able to scale my business from, a 48 unit in July of 2015 to, we're closing on a 240 unit and 160 unit in the next 30 to 60 days.
Wow. Wow. And several times in the last few minutes, you've referenced the power of your network, even when you sold residential and then when you went to Marcus and that's how you tapped your network to get the position there. And, you keep referencing that. And I just want to draw attention to that. So my listeners pay attention that the incredible power of your peer group and the people you network with and doing that. So you bought, so your first deal that you did on your own, was that what size was that one?
It's a 48 unit in Columbus, Ohio.
Okay.
The purchase price was 1115 with equity of about 580,000.
Okay.
And about 200,000 in capex, capital repairs that were needed.
Right. Okay. And you syndicated that deal, or I assume you put
Yep.
Okay.
Yep. I put it together. I syndicated. I raised the money. I do have a partner in that. My dad not only helped me with the loan because that was a smaller bank that financed that, so that one happens to be recourse. All the other loans are non-recourse.
Okay.
That deal's recourse. So I did have a partner who was a friend of mine, as well as my dad, who helped me with that loan. It was an $830,000 loan. They both co-signed the loan with me. My friend put in 100 and change and signed on the loan, and then we raised the balance. I raised the balance mostly from, close, my network again. I didn't, and I have one of my cousins in the deal, but other than that, there was not much family in there. But
Good.
That goes back to what you said earlier. Family sort of looks at me. I know my one cousin, who I love to death, said, he talked to my brother on the side. He's like, does John really think he's going to make this real estate thing a career? Everyone thinks they can do that. My brother said, my brother stuck up for me. He said, yeah, I mean, he's motivated. If he wants to do it, he'll do it. And, I beat up my cousin a little bit when I see him now. And he says, yeah, I was wrong, But that goes back to what you said earlier. You'll come across everyone and their brother telling you that you can't do it.
Sure.
But if there's a will, there's a way.
And you have to realize that it's their paradigm. It's not that they don't believe in you. It's more that they don't believe in themselves. And so, and people are afraid of change. And when you're growing, they will try to hold on to you for fear of loss too. So, all of those dynamics exist, and you guys just have to be, those of you that are about to get into this, and those of you that have your regular JOBs, and are going to, get out there and do this, you have to realize that that's going to happen and where these people are coming from. So let me ask you this, most investors buy, reposition, and sell. And I don't like to sell anything. What is your position on that? Are you buying to sell, or are you buying to, refinance, ultimately hold on to it? What's your game plan?
That's a great question. When I first started, it was a couple of years ago. We were at a different climate. Now, I'm not going to say here and preach here that interest rates are going up, or I have no idea. And the smartest people that they don't know as well. But I can tell you from 2014, my initial plan was 36 to 3 to 5 years, 2 to 5 year holds. Get in, do what you got to do, and get out. But I will tell you, the last 3 deals that I closed and the one that's closing shortly, they all have 10 and 12 year loans, and I'm locking in long-term debt, and I'm going to have the tenants pay down principal at really low interest rates, because I'm looking at deals today saying, if something goes wrong or interest rates go up or the market goes a little bit sideways, is this a deal I want to be in for the next 10 years, if not longer? Right. So I definitely have a more longer-term view on these properties than I did when I started. At the same token, I do like the buy something that might be a little bit beat up, vacate it or renovate it completely, refinance, pull out your money, and then hold for long-term cash flow. That has been my paradigm shift over the last, I would say, 6 to 12 months, and that's literally been our focus going forward. The longer-term deals that you can really lock in, high 3s, low 4 interest for 10, 12 years on a Fannie Mae loan.
Yeah, I'm really glad to hear that. I think you'll very, very much be glad you did. All the people that I interview have met and experienced in my lifetime. Most of them regret selling, ultimately. Unless they're using the proceeds to buy larger, and that's the only way they can do it. But if they've got investors that are on board for cash flow, and maybe with a liquidation event, when you refinance, they get some of their capital back and they stay in the deal. I mean, that's really attractive. And that's why my show is called Lifetime Cash Flow, because that's obviously what I believe in. So, all right, well, let me ask you, I know my listeners are going to want to know, in your words, what you would tell somebody that wants to get into this business. What advice would you give them?
I think the 2 things that I've been saying a lot lately is that real estate is easy to put on the back burner because you don't, it's not find a deal, get paid millions of dollars. Can it happen? Of course. You hear all those stories about these wholesales of multifamilies and all these crazy things, but the realistic truth behind it is they do take a little bit to put together. The education side, the getting your feet wet, meeting the right people. But it's easy to put on the back burner. So, the big thing that you want to ask yourself is why you want to get into it, and make sure that why is apparent. You see it every day, and it's going to fuel you to do what you got to do, and never give up. I started investing in real estate in 2010. It's 6 years later. And then for the first 5 years, I'll be the first to admit, a lot of transactions. I did work. But if you took out what I made income-wise at my job, my real estate deals did okay. But by all means, they weren't, blowing the returns off the paper. And it was like, wow, this is what I want to do. So, it took 5 years of, pretty intensive work to get to the point where I'm at. So I tell people all the time, if there's a will, there's a way. Don't give up. And a successful real estate investor doesn't know any more than someone that's never started. What I've been saying all the time is that a successful real estate investor has the database and network. When it goes off the tracks a little bit, you get it back on the tracks a little bit faster, because no deal goes A to Z exactly how you planned it. You're going to have your ups and your downs. So, it's building a networking, just taking down people's phone numbers and making sure you keep your network engaged to get you to where you want to go.
How do you keep them engaged? I'm really glad you said that.
I'm a big believer. So I have a personal goal every month of reaching out to 30 new people, whether that's at a networking event or, online or wherever I can meet 30 new individuals. Not only just meet them and get their card and shake their hand, but a follow-up, sit down, at least, 30 to 45 minutes, cup of coffee, and it's what can I do to help you build your business and what do you need help with, and how, that's a personal goal of mine. So keeping them engaged, and then the people that are in your network already, don't shortchange the, hey, let's go grab lunch. Hey, let's go get dinner. I put together a monthly event, not only for my investors, but for new investors to come. And, what we do is, each month, 3 hours, I rent out a hotel room, rent out a room. I'll do a wine and cheese party. During the holidays, the end of the year, I'll do more like an investor relations thing. Everyone come network like a holiday party. Keep engaged, rent out a room, have a dinner for 4 or 5 of your friends. Just keep people engaged, keep them educated on what you're doing and up to date. Because at some point deals come in. If you don't have millions of dollars in the bank, you're going to need help with your network. So
you're going to need to raise money. Wow. I want to
exactly.
hammer what you just said home, guys. I mean, I hope you wrote that down. Meet 30 new people a month. I mean, that's extraordinary. And then not just get a card, follow up. And I know I'm being redundant, but I want you guys, I do that when I hear something that's really important for you, and follow up. And have lunch or dinner and develop that network. Now, once you meet these people, how do you stay engaged? Do you invite them to this monthly? How often do you have this get together? You said monthly?
So I do an event once a month. It could be an educational component. It could be a breakdown of a deal. It could be offering up a new deal. I have an email blast that goes out once a month. Potential investors might get a little bit more. The regular network, once a month, just to not, bother people too much.
Right.
Handwritten letters, Starbucks cards. I just did due diligence on a 160 unit down in North Charleston. The whole team that was there is going to get a little Starbucks card and a handwritten thank you letter, basically just saying, listen, I know you're my management team, but I obviously appreciate everything you guys did over the last 48 to 72 hours. And those go even with brokers. If you write a handwritten thank you card, this business is 100% based on a follow-up. Everyone says to do it. 10% of the people do it. I've written handwritten letters to people, and one little postcard. Hey, I really appreciate you taking that time and meeting with me and showing me 3 or 4 deals. Something like that. You just start ticking up the list of a really solid contact of people, whether that's Aunt Betsy or whether that's Mr. Broker that's in a market you like. People don't do that, and this is coming from not only the investor side but the broker side. I had a ton of clients. You very rarely get gifts from them because if you did something, it's just not there. So I say follow up, create an Excel database of all your contacts, and it could be as simple as everyone has an iPhone. Set a reminder to call Rod tomorrow at 12 o'clock, and don't say, hey, I need money. It's, hey, Rod, how's it going? How's the kids? How's the family? Just following up. Haven't spoken to you in a bit. It was great talking to you. A little call like that goes so far over the course of developing a relationship, and people don't do it. It doesn't always have to be business focused. It has to be, very passive environment. Just, keep the network.
You're adding value to them. I mean, really. I mean, you're
exactly.
You're brightening up their world, and that's so it's so interesting. You said you talked about handwritten cards because I interviewed Tom Hopkins recently. He was an old, I'm sure you know the name, but he sent me a handwritten thank you note, and I was like, holy cow, that's such a class act. When you get that from somebody. And I just met with a potential investor that did the same thing, and I'll have to tell you, I'm failing in that regard, and I do send gifts sometimes to people I meet with, but I will tell you that it's so powerful. So, and I love your monthly meetings, and I hope you guys wrote that one down. That's a great way to bring people in, new investors to meet existing investors, which is social proof. I mean, that's a way to build social proof, which is very important whenever you're selling anything. So that's a great technique.
100%.
Yeah.
Great. And it's a numbers game. I've had monthly events where 2 people showed up.
Right.
And 80 people said they're coming, 2 people show up. Don't get discouraged. It's time. It's not something that you could just it's over time developing relationships. So it goes back to that, don't hang your head when you send out a direct mailer and nothing comes back. Do it again. You have a monthly meeting, 2 people show up. Well, you know what? Turn a frown upside down and say, okay, well, now it's more intimate. Now I can get to know these people as opposed to having 80 people there and you don't get to know anybody. Take that time to maybe scrap the presentation and throw out the sales pitch and just say, hey, what are we doing here, guys? And, make a bad situation good in any way you look at it, because that's the only way it's going to work. Just adapting to what is presented.
Sure. Yeah, absolutely. So let me ask you this. Obviously, you're great at sales. I mean, your background speaks to it. I mean, from stockbroker to Marcus and Millichap, to the residential component. I mean, obviously, you know how to sell. How is your analytical ability?
So that's something that I actually get credit for a lot from not only my investors, but my managers. I was good at math and science in school. It was what I excelled in. Okay. So is it my favorite part of the business? Absolutely not. I'd be lying if I said I love to underwrite 300-unit properties. I hate it. And what I normally do, I generally do back of the napkin. Here's the average rent. Here's the size of the property over 12 months. I have enough units under management that I know what expenses generally cost. I do the high level. If that number comes close to where I want to be price-wise, then I dig deeper.
Yeah, sure.
But that's by far, I would say I'm good at the analyzation side of it, but it's definitely something that, my business is growing. We're actually hiring. We actually just brought on I just brought on a full-time kid, 24-year-old. He actually stockbroker, hated his job, wanted to come into real estate. His mom's an investor of mine. I just brought him on. He's going to, I'm training him to underwrite and market reports and stuff like that. So I know where my pitfalls are.
Yeah, well, you know where your strengths are too. Yeah, you know where your strengths are too. So you're playing to your strengths. And the reason I brought that up because I know a lot of my listeners are great at one or the other. You're an anomaly, frankly, and very not a lot of people are great at sales and analytics. And I
appreciate that.
No, it's truth. And so I know those of you that are listening that are either good at one or the other. You've got to focus on building that. On building that other side of yourself. And I've had lots of conversations with listeners that have called me that have been great at one or the other and they need help in the other. So, the analytical ones get caught in analysis paralysis and the sales ones are fire, ready, aim, and they make all the mistakes because they don't analyze. And so, in fact, that ties into my next question to you. Tell me about a when you got your butt kicked, when you got bloodied. Tell me about I wouldn't call it a failure, but a seminar. Tell me about a seminar that you had.
Yeah, no, it's a good question because as I said earlier, I mean, I'll be the first to admit I've made mistakes. Now, luckily, we've overcome them. For example, the first property I bought, we bought a property. It was 70% occupied, half the tenants paying. Disaster. Just wow. The tenants were bad tenants, and when we bought it, we expected to have vacancies, but we didn't expect as many as we had. So one pitfall, I went in with a plan on, okay, I'm going to renovate the exterior, the parking lots, and rebrand it. But we had so many lost tenants and such bad collections right out of the box that we did more interior renovations and the exterior slacked. And now it's been a year and change. We just finished a parking lot yesterday. And what I realized through that period, I didn't get beat up. This is a black eye. This wasn't like, we're going into foreclosure.
Right.
This was a black eye because we renovated the interiors, which were nice, but the property still had a stigma on it that we couldn't get the right tenants in. So our first year, we had a ton of turnover. And I knew why, but we were behind the 8 ball with the interior renovations that we only, we put a new sign in right away, which looked great, but we still had old doors and broken doors and not broken, but like beat up doors, and the parking lot looked bad. So we were still getting the same type of tenants.
Was it a financial thing? Is it just you just had so much money available, and so you had to focus on the interiors? Is that what drove?
Exactly. We had we had a mortgage we had to pay, so with 50% of the tenants in there, we had to get the units rented, and we were renting them, and the tenants, it was a high turnover. They were good for 6 months, and then they were gone. So what it taught me was, okay, stick to your plan, do the exterior. maybe some of that renovation, it's going to go, we did have a reserve. And like I said, we have plenty of money in the bank. It was a black eye at most, but it basically taught me, okay, stick to your plan going in. Don't let anyone deviate off that. The way that we do multifamily property is the outside in. You buy a property and you completely change the exterior to rebrand it as, okay, there's a new sheriff in town. And I knew that going in, but my manager, he's focused on gross income because that's how they get paid. So he went in there saying, we got to rent apartments. And I was like, oh, you're right. Okay, you're the expert in that market. Let's rent apartments. Well, I can't rent apartments unless you renovate them. So we had the money. We planned to renovate, but we spent a little of our exterior budget interior, which shot us in the foot until we got the tenants in there. We brought the money in, and now we had enough to say, okay, we're comfortable. Now let's do the exterior. But we planned to have no cash flow for 12 months. So it wasn't something that I had to go back to investors and say, guys, no cash flow.
Right.
This is something that we planned on, but we didn't plan for the mass exodus that occurred.
Sure. Which do you think you might have stopped some of that exodus if you'd just done the exterior first?
I do, because I think we would have turned the tenant base as opposed to who was lived. We had the SWAT team take people out. Oh, it was a rough tenant base, but I think that if we would have turned it, the area is not that bad. The area didn't warrant it. The area is actually much better. But now that it's new, it's rebranded with new painted doors, new parking lot. It gives off a different appearance to tenants, which is now bringing in a significantly higher quality tenant. So, as I said, this could have turned out really bad, but we actually just listed this property at 1,875, and we're all in at 1.4 in about 15 months. So it was a mistake, but we were able to overcome it. And that's one story that I think is that's very
good.
valuable.
No, that's good. Absolutely. Now, let me ask you a question. How did you finance that if it wasn't stabilized? I mean, if you're at 70% occupied, 80% is stabilized, what kind of debt were you able to get for it?
So we actually got, at the time, it was probably one of the best loans you could get for that property. And the only reason why is small world. Okay. I was introduced to a mortgage broker, and we were talking, and he was telling me that he was working on a deal in Manhattan. And I was like, he told me the address. I said, I said, do you know Sal Burrito? And he's like, how do you know him? I said, that's my grandpa. He said, oh my God. He said, if that's your grandpa, you have nothing to worry about your deal. I'll take care of it. He had a very good relationship with a bank, but I mean, we got a 6-year loan, a 6-year term, 25-year amortization, 75% loan to value.
Wow.
And at a 5.25 interest rate on an unstable property, which was a
really, really
excellent
good
loan.
Yeah, usually you'd have to get bridge debt or something. So that's why I wanted to ask the question.
And that's how I underwrote the deal.
Yeah. Okay. Well, good.
Yeah, you're 100% right. Yeah, right. We underwrote the deal for 75% loan, 80% loan to cost at like 9-10%. Something a little bit more expensive than bridge, but not hard money. That's what we use. And just networking, like I said, use your database. He had a very good relationship with a bank, basically said, listen, they're good if they're looking at this. And the bank came through. They did it. They underwrote it, and they gave us a very, 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 very good loan for the type of property that it was.
Oh, that's great. Tell me about your team. I mean, obviously you've got some people that are helping you. You've got an incredible network. If somebody's wanting to get in this business, what are the most important relationships they should have?
I say right out of the box, I own property in the Southeast and the Midwest, about 150 units in the Midwest, and the rest of them are in the Carolinas. It's imperative to have a property manager that you trust and that is good at their job, because these deals, I'm an asset manager. I manage the manager. But these deals are basically contingent upon, if a manager wants to do what they want to do, if you don't have systems in place to keep that manager in check, and we have meetings once a month. We have meetings once a week. They have reports they have to send me on a weekly basis. They know how I operate my business, but that's the best relationship you could have.
Now, I just want to clarify. You're talking about an on-site property manager, correct?
Exactly. Yeah, right. A third party. Maybe the property doesn't support someone living there, but a third-party manager in your market. Because let's just say you live in New York and you're buying a deal in Florida. Right. You can't jump on a plane and tour every deal you see. So you got to have a relationship with boots on the ground, whether that's an on-site, mom and pop maintenance guy, or whether that's a third-party group. But you need a good manager that you could say, hey, go down, take a look at this. What do you think? Tell me how much work it needs. Tell me how much, how we could run this. What do you run that's like this? That's, I would say, this business. I'm not going to say it's contingent because there are a lot of people out there that want to self-manage.
Right.
I just know that for my deals, third-party management is a world of difference.
Okay. Well, that's good. I personally love self-management, but I totally respect your position and the advantages of your position. Now, one kind of last framework area I want to talk about. Tell my listeners the best ways to find deals, in your opinion. I
say the best ways to find deals is, you got to have a couple hooks in the water. I'm a big believer in cold calling. I direct mail to the smaller deals. It works on the bigger deals, but it works better on the smaller deals where you get more mom and pop style owners. Cold calling, and then bottom line in multifamily, you need broker relationships. So those are the top three. I can't say brokers are better than managers. Brokers are better than direct mail. Direct mail is better than cold calling. I have an experience of cold calling, not only as a stockbroker and a real estate agent. So I tend to gravitate towards that.
So you're literally carving out a few hours a day, and you're dialing for dollars.
Exactly. I just get on the phone. I take a couple hours. When I first started, I went to my Marcus days and said, okay, make 350 calls a week minimum. Now I have a little bit more stuff on my plate, so I don't make as many calls. That's one thing that I work on. I try and make more dials, but I love to cold call. And brokers. Brokers you need them. You need to build a relationship with them in this business because the brokers, they cold call. So they know every deal in the market. Right. So if you have a good relationship with a broker and you could build a relationship over time, it's not a one phone call thing. Like it's 6-7 months of, building a relationship, the thank you cards, meeting them, touring them, taking them out to lunch. It takes time, but brokers can make your life a whole hell of a lot easier if you tell them what you want, and when they deliver it, you execute. Right. That's how you build credibility. You have to execute. If you say you're looking for a 20-unit deal that needs $3,000 a unit in rehab and is in a C area, if they deliver the perfect deal, you got to underwrite it. You got to say, okay, you're right about everything except for I think this area is a little bit worse than you think it is, or it's not near an employment center, or my manager doesn't manage in that area.
The response, you gotta respond.
Execute. Exactly.
Right. Okay. And you don't
100%.
Just ignore it because they sent you the deal. And we've talked about this before, guys. You've got to have open lines of communication. Back to your cold calling. Tell me, give us your script. You call somebody dead cold call. What do you say?
First thing I do is, when was the last time the property, when was last time you had the property evaluated? Because, you're calling long-term owners, mom and pop, what's the value of your building? The market is up a lot over the last 10 years. Right. I offer something. You can't just call, hey, I want to buy your building. You can try that and it might work, but you're going to say that, they're going to respond with, okay, give me $30 million. So okay. I basically, just like anything else in this business, if you bring value to the table, you get more in response. So, hey, what's the value of your property? Well, what do you mean? Well, what we're offering, we do, complimentary valuations based on the market. Do you have a rent roll and expenses? You give me that, I'll tell you how much your property is worth in today's market. And that's sort of where I lay down. That's the path I go.
That is awesome. I love that. And again, I want to hammer home that message, guys. Every step of the way here, what's he doing? He's adding value. Every step of the way. And if you come at this from that framework with the investors, with the brokers, with the other relationships, he's adding value. And here cold calling, adding value. Love it. Big lessons. Hey, John, you've been absolutely awesome. I really appreciate your valuable time today. Guys, John, how can people reach you?
I would say the best number for me, my office. I travel a lot.
Well, how about like a website? Do you have like a website that?
Yeah, you could. So my website's actually being rebranded right now.
Okay.
But it is jcpropertygroupinc.com.
Okay. And
then email and phone number on there. I'm pretty responsive. Within 24, 48 hours, I'll get back to anybody.
Okay. All right. Well, you've added a ton of value today. I very, very much appreciate your time. It's been a lot of fun, and I know, my listeners are going to be grateful. John, let's stay in touch, buddy.
Absolutely. I appreciate it. Thank you for having me on.
All right. Take care.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please subscribe and then take a moment to visit iTunes and leave a 5-star rating and review. For more resources to connect with us further, please visit our website at lifetimecashflowpodcast.com. Tune in next week for our next show.